Well, I mean, I think a lot of people, Kay, thought that they were going to cut interest rates at some point, but they thought they might leave it until their official meeting, which was later on this month. So it's definitely a bit of a surprise in terms of the timing. It's very unusual to have an emergency cut that comes outside their normal schedule. That kind of brings you back to the era of the financial crisis last time they were doing this. So on that front, it's dramatic. Also, the scale of it is dramatic. Normally, when they cut interest rates or move interest rates, it's by perhaps a quarter of a percentage point each time. And this time around, obviously, half a percentage point, it suggests they are really worried. This is a big move. It is obviously down to 0.25. That's as low as they've ever been in the past, down after the EU referendum. They cut it to that kind of level. But this is it's kind of into very, very, very low territory, and the nature of it coming on the day on budget day, I don't think that is supposed to be a coincidence. The fact that they have done this just as the Chancellor is about to announce a whole series of measures backs up something that we heard from both Mark Carney and Andrew Bailey, and that's the other kind of striking thing, Kay. Literally, this is the last week of Mark Carney's tenure as governor. So I imagine Andrew Bailey, who's the next governor as of next Monday, will have been involved in this decision as well. We're going to hear more about it at 9 o'clock. But they were both saying in their kind of testimony with the Treasury Select Committee last week that it was right to have some coordination between the central bank and the government when you're doing these measures. So what this, I think, tells us, a clue, is that there is going to be kind of potentially some big stuff in the budget later on today. The idea is to do a shock and awe set of measures. You've just had the monetary, and they've announced the interest rate cut before market open. That's the reason it's kind of early in the morning. And you now have the fiscal policy potentially coming along later in this form of the budget. And it just seems to suggest we're potentially going to have a more dramatic move from the government than I think people had expected. It follows in the wake of the Federal Reserve, the U.S. central bank. They also cut interest rates just last week. And so I think the expectation was that they would cut, but this is perhaps bigger than expected and certainly earlier than expected. And as Tamara was saying, there's also measures to help small businesses, short-term kind of funding schemes, similar again to some of the stuff we saw in the financial crisis. But a very dramatic move, Kate, unexpected, an emergency move, and it suggests that both the bank and the government are kind of moving in lockstep at the moment to try to do whatever they can to prevent a recession and indeed an economic crisis.
But Ed, if it's a move that we weren't necessarily expecting at this time and 0.5% down, an emergency measure some might call it, how does that reassure the public? How does that not just make them even more anxious?
It's a good question, and that's always the dilemma with doing these things. I mean, you both need to reassure that you are kind of taking every step necessary, but you are also underlining the fact that this is, to some extent, an extreme move. This is a moment that is very unusual for a central bank to do this. The big question will be to see how people react. I mean, you were asking Tamara a moment ago, how will people notice this? Well, this will affect your mortgage. If you have, obviously, a floating rate mortgage, it's suddenly a lot cheaper. And obviously, it'll affect your savings as well, which will be a frustration for those who were hoping for interest rates to go up. I mean, a lot of people thought interest rates were going to go up not all that long ago. So now they are down at rock bottom again. And I think the other measure for business will hopefully mean that some businesses that might not have otherwise been able to survive just because they, had short-term funding issues. The issue here, Kay, is it's not just about money, it's about time. It's about ensuring that businesses who, have lots of bills to pay, have taxes to pay, but, are facing the issue with customers not necessarily turning up, with people not shopping at the moment, with employees potentially off sick. They are facing an issue with needing time to pay bills. And that is going to be, I think, the tenor of a lot of the measures that we get from the bank we've had this morning and indeed from the government later on. It's all about giving businesses and households time to kind of keep things ticking over until the disease has passed, hopefully in a kind of, in a matter of 3 to 6 months' time. So, but it is a big move. There's no getting away from it. It's a big move. It's a very surprising move. And while I say we'd expected the bank to do something at some point, the nature of it coming on budget day, just before the Chancellor is going to unveil a whole series of measures that the vast majority will be about coronavirus. It's a big move, and it underlines how important this day is and how concerned every wing of government is about coronavirus.